man, FOMC surprise. Markets are falling despite us getting the predicted 25 basis point rate cut. What is going on in this market? Why are we falling? There's a lot to unpack here. This is an emergency video. If you like this type of content, smash up the likes. Do not forget to subscribe. We've just hot off the press got the reading from the FOMC. They've decided to cut the interest rate to 4.25 to 4.5%, exactly as we were expecting, but markets are tumbling. Why is that the case? It's to do with the summary of economic projections. I'm going to break down exactly what clues were shared in there. Jerome Powell's going to be speaking shortly as well, but no doubt he's going to cover off exactly what we're going to cover off in this video. Smash up the likes. Let's get straight into this one because it doesn't make good reading, and in fact I define it as a hawkish cut. Yes, we got the cut, but it comes with hawkish tonality from the Fed, and I expect Jerome Powell's going to back that up with his statements very shortly. Bitcoin falling here 103.2. Equities falling, traditional market falling, the US dollar is falling right now, yields are rising on government bonds. And we can see it's to do with the summary of economic projections. Now, this is not going to be your normal crypto stuff, but it's very important you understand this. Remember, crypto is a function of risk rotating on. When risk rotates on, crypto does well. But first and foremost, we need to understand what is the bigger picture here. And the bigger picture here is it's a hawkish cut because the Fed understand that the economy is healthier than we'd previously expected. So this is not a bad thing. It's almost saying, look, we can keep rates higher because the economy is good. It's better than expected. GDP is better than expected. And the numbers evidence that. So let's go straight through this and take a look. Previously, for the GDP for the end of this year, in the September projection was 2. They thought it would be 2% GDP growth. That's been revised up to 2.5. So a healthier GDP economy. The unemployment rate was previously listed as 4.4 in the September version of this document. That's been revised down to 4.2. So the labor market is healthier, less unemployment. The PCE inflation was previously 2.3. That's gone up to 2.4. So more inflation because the economy is doing well, maintaining higher prices. The core PCE was 2.6. That's been revised up to 2.8. And the main number that then spits out is the bit that the markets are dumping over. And that is the Fed funds projection, okay? Previously, you could see that by the end of this year, they projected we'd be at 4.4, and we're there. That's fine. What's more important is this number, the end of 2025 figure. People are thinking as far ahead as December of 2025. Previously, the Fed had led us to believe we'd be down at 3.4. They've now revised that down, to 3.9. That means they're only pricing in 2 rate cuts, just a solitary 2 rate cuts in 2025. And this is why the market's just calming down a little bit here, because the markets had priced in, based on what the Fed were telling us, that we'd be down at 3.4 by the end of next year. Now they're saying, no, we'll be at 3.9 by the end of next year. By the end of 2026, we'll be at 3.4, where we were previously thinking we were going to be 12 months earlier. And then still, as long as the end of 2027, we'll still be sitting there with a Fed funds rate with a 3 handle. And this is to do with a lot of things, right? The economy is healthy. We're seeing good company earnings. You're seeing strong Christmas retail sales, you're seeing strong inflation, you're seeing lower than expected unemployment, you're seeing good GDP, you've got the Trump administration coming in with all of the stuff they're working on. That's all going to have an impact. And that is why the Fed have to take that all into account. You don't just want them cutting rates when they don't need to be, because then guess what? Inflation will rear its head again. And that's the thing they don't want to see, is inflation rearing its head. So this is the impact we're seeing on the market. I also want to draw your attention to this, the dot plot. This is the very important thing that the market is taking into consideration for this meeting, which brought us to the end of 2024. That was the last FOMC meeting we will be having for 2024. If you appreciate these updates for all of the FOMC meetings this year, then make sure you smash up the likes and subscribe. We were one of the very first years ago guys, you can go scroll back and see, one of the very first channels covering FOMC and macroeconomics, because crypto channels weren't doing it. Crypto channels just thought, oh no, this Bitcoin thing's just going to go to the moon. And I'd break down the economics, because I have a bit of an economics background and obviously an investment banking background, to share this with you guys and say, no, we are correlated to risk on assets. We need to know this stuff. So smash up the likes if you appreciate that. you can see here the majority of the voters here said we should get our rate cut today. We did get it, but you can see there was 4 dissenters, 4 people here who did not want that rate cut, but nonetheless the majority had won. We've got our rate cut. More importantly, look at this. This tells you where we're going to be at the end of 2025. The vast majority of dots show us there 3.75 to 4. Fed funds rate of 3.75 to 4. That is what's fundamentally changed. Remember, like I was showing you earlier, this previously had an average of 3.4. Now they've got the average in this band. So those dots have shifted up. Now you've got a couple of people who want to keep us here as high as where we're at. I mean, this one guy voted that by the end of next year, we should be in the same place. We should have no rate cuts next year. These 3 gentlemen or women on the Fed voted that we should only have 1 cut next year. And then the vast majority voted that we should have 2 cuts next year. 3 people voted we should have 3. 1 person voted we had 4, etc. You get the point. So we've got a couple of people fighting for less cuts. You've got a couple of people still fighting for more cuts. But the vast consensus is saying, hey, it looks like we're only going to get 2 next year. Now, it's important to understand that there's a thing called jawboning, right? Which is where the Fed will use verbiage and use information like this to get the market to do what they want to do. So maybe this is the Fed's way of saying, look, markets, you're only getting 2 next year, so you best tighten yourself. You best start dumping, recalibrating your prices, calm down with your risk on, chill out. And that's called jawboning, where it gets the market to do its dirty work for it, okay? So that's something that could be going on right now. The Fed may still decide to do 3 next year. They may do 4 next year, depending on what goes on in the market. As we know, the Fed just gives some data points, but really they have to move in real time. If now, between now and the next FOMC meeting, which incidentally, if I share with you guys when that is, the next one is not until January the 29th, so I will be here with you guys in the new year, so make sure you're subscribed. We'll cover off the very first FOMC of 2025 together. The market, is stuck. They can't really price in a rate cut. They're going to have to price in a pause, and that's what the vast majority of the market is doing. But what if negative data comes out, right? What if retail sales soften? What if a PCE inflation really starts to come in, under control again and starts lowering? What if the GDP figures lower? What if unemployment starts to go up? If these figures start to come contrary to the beliefs of the Fed that we've just gone through, then again, they're going to have to adjust their thinking. Maybe we still will get those 3 rate cuts. More interestingly here, for the long-term picture, if you look here on the right-hand side, you can see it's a bit scattered, right? There's not much consensus here. I mean, going further than 2027, you got, Fed officials up here still thinking we're going to be 3.5 plus on the Fed funds rate, and then you got a bunch of cluster here saying we'll be less than 3, we'll have a 2 handle. So you can see the Fed is pretty unsure in terms of the longer picture. They're quite clear on what they want for next year, and that is that the vast majority just want that 2 rate cuts, and I think that's ultimately what's leading to Bitcoin having a little bit of a poop here. Of course, not a crypto specific issue. You can see here US market is not too happy as well. Let's just give this a refresh to see how we're looking on the US market. S&P down 0.5%, Nasdaq down 0.5 as well. And of course, your bonds are going to be climbing as well with a slightly positive increase in yield based on the risk rotating off. Let's also check in on the dollar index, and as you expect, big candlestick on the hourly here for the dollar index as risk is going to rotate off, right? Remember, we want this to go to the downside for crypto to do well, and you can see on the daily chart it's been on a decent uptrend. So if they can break through resistance here on the dollar index, it could spell a bit of a deeper pullback here on crypto, which incidentally isn't too much of an issue, right? Like I shared here on the daily chart for Bitcoin, we've got an EMA ribbon giving us support all the way down to 90. A pullback down to 90 even is not crazy. If we lose our daily EMA ribbon, okay, then we're set for a bigger pullback. If we look at the weekly EMA ribbon, you can see that, that support doesn't really come in until 80,000. And like I shared with you guys through this week, even if we wanted to pull back to the previous all-time high on Bitcoin, which we broke through around that 73 to 74K level, that would be your real pullback, right? If you look at the current levels where we touch the highs down to that previous all-time high, that's a 31% pullback. That market would feel it, right? That'd be nice and healthy and would crunch a lot of that greedy money out. Even a 20% pullback down to 85, even around the 87, 88 mark, and you would start to see fear and greed index fall. You see people start to panic sell, particularly those that were chasing the prices in the hundreds and the late 90s. They will have a little bit of a panic. But for me personally, any pullback into this region, into our weekly EMA ribbon, I'm taking it as an opportunity to nibble on Bitcoin, on Ethereum, on some of my favorite altcoins as well. And it's healthy, right? If we get a pullback, no worries whatsoever. This is not a pullback based on anything fundamental to do with crypto. It's not even a pullback to do with anything fundamental in terms of the economy, because the economy is showing good signs. It's a healthy economy, and this is a hawkish cut from the Fed based on the economy being healthier than they thought. Still really positive going into 2025. Trump administration, we expect it to be pro-growth. We expect it to be a prosperous year, because ultimately that's what he's going to be measured on, right? He's an entrepreneur. He's going to want to deliver for the US, and we know that crypto markets and stock markets across the globe are correlated to the US doing well, and that's going to be an important narrative going into the year. So there you have it, guys, an important Fed meeting. If you appreciate this type of update, as and when it happens, right, no matter where I am, even just here with my laptop quickly giving you guys this update, no fancy equipment, it's not a beauty pageant. If you want the data as and when it matters, that's what this channel is here for. Make sure you subscribe. Thanks for watching, and I'll see you in the next one.